In reality, 15% actually ended up using Imashonisa in the past 12 months. And it's a staggering 15 million people. 15 million people are almost disabled by the system. They can't, get to the next step of their lives because they're excluded from financial options. But what we're seeing is people can't. They really can't. Our data shows that people are taking out loans just to get by, just to get to month end.
So if I qualify, how long does it take for me to get the money?
You get your cash out in.
Welcome to another edition of Mindset Profits, and in this show today I want to talk about the decisions that shape your life. I want to talk about credit. A lot of times we talk about credit and debt with judgment. I know when we see people that have taken too many loans and ruined their lives, the thinking we have around credit is it's something that is attached to a lot of poor people. It's something that's attached to people who don't know how to use it. So I want to demystify that myth, and that is why today I have Wonga on the podcast, and I'm joined by Usistina. How are you?
I am good. Thank you for having me.
When I'm talking about credit in this way, I'm sure it's triggering you. Your organization exists to give us loans. And when I'm saying credit is something people don't have nice words to say about, how does that make you feel?
It's actually not, and we'll dive into the data, but it's not a true reflection on reality, right?
Yeah.
So, like you said, there's just such a lot of judgment and negative perceptions about credit.
Yeah.
But in actual reality, everyone is getting a loan at some stage in their life. So, it's interesting that people are still negatively, associating loans. But
all right. So, what does Wonga do? I think if we have that context, everyone will understand why I gave the kind of intro I gave. Because you guys introduced me to a new term, developmental credit.
Yes.
And I'm used to credit and I blew it type of credit. So you guys are saying credit can transform lives out there, and the data is showing that it actually is. So I'm curious. I want to hear this data. I hope you shift my mindset around loans and judgment around loans as well.
I'm hoping so.
So, talk to us about Wonga.
Okay, so Wonga, we specialize in short-term loans, so people can get a cap of 8,000 Rand up to 6 months. So they're very short-term loans, very capped. You're not going to get into big debt spirals. That's not our core, value proposition.
Okay.
And that's what we do. That's what we've done for many years. People, when we bring out Wonga, people always remember the puppets that used to appear on TV like many years ago.
The adverts.
The adverts, But that's us in a nutshell.
Okay, how has the experience been in the space since you guys started? I imagine, with what I know with loans, right?
Yeah.
There's a lot of defaults and a lot of people who take loans that they can't pay back. What has the experience been like for you guys?
That's not what we see.
Is it?
Yeah, I think...
So people do pay?
People pay their loans. People pay their loans. But I think in order for any business, whether it's Wonga or other lenders, including banks and so on, to take a step back, we're highly regulated. I think we're one of the few countries that is highly regulated in terms of just credit, provisions, if I can call it that. But we are not going to over-indebt our customers. So there are many factors that we consider before giving out a loan, and affordability is one. So if we see that you're not able to afford a loan, we're not going to give you the loan. And that's just one of a number of criteria that we consider. So from a business point of view, it's not wise for us to give you a loan if we know that you're not going to pay us back. But also from a customer point of view, it's just not good practice to over-indebt people who just can't take on loans and credit.
Is there like a profile of clients that generally look for you?
That's the thing. Every type of South African, every type of South African, from very high income earners to, we do have a minimum threshold. But yeah, from, mid point type earners all the way to high income earners, every type of South African can get a loan.
Access the short-term loans.
Mm-hmm.
You guys did a study on the state of debt.
Yes.
In South Africa.
Yes.
And you promised me that some of the findings will surprise me.
Yes.
Let's get into the data.
It was interesting. It's very interesting. Just to say, so we conduct surveys every year. Our summer spending survey is actually one of the popular ones. I think it's been running for about 6 years now, if I'm not mistaken. So we have a wealth of data in terms of, how people are spending money during holidays and how they plan to spend, are they saving up to Christmas or, getting debt and so on. But this was the first of its kind. And we really wanted to understand how South Africans not only take credit, but why they're taking credit, how much do they earn, and all those insights I was talking about, just to understand the credit atmosphere. Also, I think to debunk all the things, all the, the stuff that you were saying, which is prevalent. People are so insecure about talking about credit, yet every type of person, as our data shows, is actually taking out credit, which is staggering.
Your state that you sent to me said 90% of people have taken loans in their lifetime.
Yes.
90%?
90% are credit active. So we had over 12,000 people actually respond and take the survey. And 90% of South Africans are credit active. 90%. And our salary ranges were from 3,000 Rand, which includes SASSA, I guess, income, all the way to 80 plus.
But 90%?
90%
sounds like a lot. Are you counting mortgages and cars?
Yes. So the survey was pretty, what can I call it? We had a few categories. So house and credit and in-store loans. So I guess credit that you can get from Foschini or Mr. Price and so on.
What are some of the standout stats when you looked at the data?
Oof, there's so many.
I know you have it in front of you, so take us through some of your favorite
I'm a data
findings.
person, so if you tell me to give you data, I will just vomit everything that I can.
I want everyone watching to understand where we are.
Yeah, that's important.
And what we can do differently.
Absolutely. So I think one of the things for us is the developmental credit discussion, which we'll have, I think, in depth. Just to get out, the demographics. A lot of our people are coming from Gauteng and then the Western Cape and KZN, which makes sense, due to population. 60% of our respondents were female and 40% male, which is an interesting mix. Very interesting mix.
So in the 90%, 60% female.
Yes.
That makes me feel better.
Is there some bias there, Ntando? What are you telling us? What are you telling us?
Let's go deeper.
And so we're going to talk a bit more also about mashonisas and informal lenders and how they play a part in this. The big thing obviously was the 90% that are credit active, but 70% don't have a savings facility. So a lot of South Africans they just don't have a place to fall if there's an emergency.
70% of South Africans don't have a savings facility. That is scary. That is scary, especially looking at what the future is for each of the families.
It's a bleak picture when you consider it. But also it tells us the state of the economy, right?
Did you ever ask them why? Why? Because sometimes I feel like, of course, there's people who try and save and then go back for the savings. Because some emergency gets created or comes genuinely.
Yeah.
But sometimes I feel like it's a lot of people who don't know better, who've just not been taught to manage their finances differently? Did you
So-
ask those guys?
So the question wasn't direct, but we could infer some of the data that we got, right? So I think a big thing is not so much that people are not taking personal responsibility to develop savings habits. That would be nice to have, to be honest. But what we're seeing is people can't. They really can't. Our data shows that people are taking out loans just to get by, just to get to month end, you know.
Pay school fees.
Pay school fees,
Buy some
transport
clothes,
for their
keep the lights
kids.
on.
Exactly, like just that on top of emergencies that come up, which we really cannot, you know, plan for. That is the main reason people are taking out loans, and we can get to developmental credit, but
So
that
this
alone
is
was-
not developmental. This
yes,
is survival.
this is
loans.
survival. It's people don't have a choice, and it's actually quite sad. A lot of our respondents are almost kicked out of formal credit because companies like Wonga and other lenders cannot take on that risk. You know, it's not regulated as well. So people who earn less are really kept out of formal credit. If you don't have a credit footprint, you're not going to get credit anywhere, which
Yeah.
is interesting. That in itself is pretty, yeah.
Is that
staggering.
why they end up going to the machonistas, the loan sharks?
That's the thing. So our data showed that 5%, when asked, you know, what credit provider would you prefer, a lot of people still prefer going to banks, which makes sense. But a lot of people say, about 5% said friends and family, 5% said they would prefer to go to a mashonisa. In reality, 15% actually ended up using a mashonisa in the past 12 months.
15% of the population that you surveyed.
Yeah.
That's a huge number.
It's a big number. It's a big number. But if you think about it, if you're already outside of the formal credit facilities, what option do you have? And the questions that we ask them, right? What are you using credit for? Whether it's informal, formal, it's emergencies, it's getting, you know, by in a month and making sure that expenses are covered. So if formal credit options are not a possibility for you, what choice do you have but to actually go to informal credit?
So I think that informs where I was coming from. Because if I look at that picture, I feel like it becomes a trap. Because one, you already can't afford a certain lifestyle, and because that is how you're financing it, the interest rate attached to the loan sharks, it's so high,
Sure.
you end up trapped. Because by the time you finish paying them off, you have another
Already-
shortfall.
Yeah, yeah.
And now you need to go back.
Yeah.
And you get stuck in that trap.
Yeah, it's a really bad situation, but we know why people are getting in that trap. We know that as policymakers, as businesses, we need to really look at financial inclusion because it's important. It's affecting people's livelihoods. It's affecting their futures. Like you said, you're stuck in a debt spiral with unregulated lenders. So they can come and take your furniture, which is actually one of the things we saw with the survey we ran in I
So
think it was
people-
2019. We called
people
it the
did
Mashonisa.
say-
Yeah, like people are gonna, if you don't pay that amount, people are gonna come into your house at points and, you know, take some of your furniture, your appliances, just to cover whatever amount you haven't paid back. That's a real thing. And the 50%, you know, by the point, like you said, by the point you pay back
Wait, you're saying 50% interest?
interest, yeah.
50? I know 30.
Up to-
50?
Yeah, up to 50%. Up to 50%.
Goodness, you make me feel the kind of pain that will make us stop. let me get some coffee. 50%.
50%, up to 50%. Wild.
Did you ask though if all of these guys knew of options like Wonga
So
instead of the mashonisa? Because I don't think everyone who goes to a mashonisa goes there because they are excluded from the system. I think some just don't know that you exist.
that's a good point. So we did ask if people knew the difference, between formal and informal credit, and 6% said they didn't. They just know, a person who lives down the road from where they are, who gives out money, and, like you said, it's maybe their nearest best option. Unfortunately, again, it's unregulated, and also it doesn't create a credit profile that will enable them to one day want to go get a home loan or vehicle finance, because those type of institutions, banks and so on, need a credit footprint.
Do you know like the maximum interest that could be charged in with regulated organizations?
I don't know that off the top of my head, but it's pretty low considering 50%.
Or 30?
Considering 30 or 50%, pretty low, pretty low.
I'll look it up because I'm curious why people keep going back there.
Yeah.
And I don't believe the majority that go there can't access.
Yeah, I mean, one of the data points that we're going to talk about is over 50% of the people who go to Machonisas earn under 3,000 rand, with I think in the high 50s, so close to 60%, earn less than 7,500 rand. So these are really low income.
So you're
earners.
almost talking 60-70% of the people that go there are very low income earners.
Yeah.
The people who should not be going there.
Yes. But don't have a choice.
And hence that trap that I was talking about.
Yeah, you end up in a debt spiral that is not going to benefit anyone, really.
So when you look at this data, how do you then turn around and call credit and debt developmental? After traumatizing all of us listening.
Traumatizing you with all this information, bleak picture.
You coming and saying this is a good thing.
Yeah. So I mean, there's bleakness to the picture I just painted, definitely. But we actually found that 26% are utilizing credit for developmental reasons. And as defined by the NCA, it's a category specifically for people who want to develop their homes or renovate their homes, who want to start a small business or micro enterprise, or who want to further their education. 26%. That's more than a quarter of people want to better their lives. And like I said, there is a category of credit that's specifically developed for those purposes. Unfortunately, it's underutilized, it's underdeveloped. No one knows about it, like you said. It's like, what? That exists? No one knows, where to find it, where to get it. So they end up using traditional financing house, including us, to make sure that they're developing themselves and their lives.
What else came through the data that you found interesting?
Yeah, I think just on the developmental credit, I think it's the intention behind it is really good, right? Where we're seeing that credit is not only an option for emergencies, for all the things that you said in the beginning, emergencies, you want to get by, pay school fees,
keep the lights on,
and so on. People want options that can actually better their lives, further their careers, their futures, and so on. And how is that actually going to impact the economy? Because I know, the government is on a path to help all South Africans to better their lives, and that in turn is going to actually help the economy, right?
Yeah.
Unfortunately, that all the regulations around developmental credit needs to be clearly defined so that I know or you know that there's a facility available where credit is not you getting credit through Wonga for a specific housing need, but that you can access that housing need directly from a given source. So it's important to us to highlight that specifically, and policymakers really like doing the most to make sure that we're talking about developmental credit.
Okay.
People are accessing credit anyway, so why not make that facility available and an option for many people?
As Wonga, you're doing these surveys and this research, you've got this data. What are you doing to educate the public? Because I presume that's the main intention behind all this research.
So it's twofold. So we want to understand, how people are utilizing data. We are a short-term lender. We want to be a responsible lender, and we are a responsible lender. But I think in turn, we want to be advocates to whatever our customers and the broader South African population is going to benefit from. So if developmental credit is actually going to take people from A to B, we want to make as much noise about that, because that will actually have a direct impact on people's futures. So we call ourselves financial advocates, we're all about financial inclusion and those discussions actually starting up. We in our data, I'll actually go to that stat now. I think 15 million people are excluded from the credit market, it's a staggering 15 million people. 15 million people are almost disabled by the system. They can't, get to the next step of their lives because they're excluded from financial options.
And these are the ones that end up going to the machinist.
Exactly. And what happens when you create a system where other people are included and other people are not? The privileged few just get better, and the ones that are not,
In your perspective, maybe it doesn't apply so much to short-term learning. Do you think there are people that are getting credit when they don't need to be, just because they have access? Like, you tell me I qualify, I get it, and before I know it, I'm living an expensive life that now I can't afford. I could before, but I ended up just using credit because it was available.
So that's a very good,
Because
good question.
when you tell me I've got access to like 20,000 and I'm sitting here, even if I've got like $1,000 in the bank, if you say there is 20, you can come and get it, I'll start thinking of stuff I could use the 20 for.
Like, ooh, that shopping trip, would be nice. Yeah.
And I'm trying to tie this to the term that you gave me, developmental credit, because that kind of loan that I'd be going for is not developmental, it's pure consumption.
Yeah.
And that's how people get themselves in trouble.
That's true. That's true. That's irresponsible to to a certain extent. No, we don't prescribe any biases on any of our customers, but I think they're going to be people who go out and borrow irresponsibly, especially if they don't have a need for credit. But then, as we saw, a majority of South Africans are getting credit for actual needs, like we spoke about, whether it's emergencies or developmental.
Yeah.
And the thing about developmental credit is that to get that type of credit, there are hurdles that people need to pass that are impossible, that are really tough, that at some point, you just like, it's fine, I'll go wherever I can go to get the money, but going down the developmental credit route is just, it's impossible.
When you say there are hurdles that would have to pass that are a bit steep, what are like some examples?
So I guess it's all the bureaucracy behind the process. So, if you're going to go get some developmental credit for your home, to develop your home, the quotes that you're going to need to go get, the plans from the municipality to, this is the, the home plan, and
Or if you want to expand the house.
If you want to expand the house, all those processes that you actually need to fulfill in order to just get your home, develop the way you want to. It's like, geez, it's quite a lot. On top of you wanting to actually do something good for your life, then now you have this added pressure. And that goes with education as well. So letters, proof that
From
you,
the school
and all that. Which can almost become not an enabler for you to actually develop.
Okay, what advice do you have for people in that position? I think they are almost giving up.
Yeah.
Because the registered institutions just require too much.
Yeah.
They want so much.
Yeah. I mean, and that's why we're having the conversation, so that honestly, we can partner with policymakers to make the processes and the frameworks a bit more aligned to the real picture, picture on the ground. But I would say that every desire to want to develop your life is good, it should be celebrated, and you should be patient, although the system is not working in your favor at the moment, I think, be patient and save. If you have the facility and the option to save, save and really plan out how that could look in the next couple of years while this policy is actually developed and created.
Okay. I like what you're bringing out, that we should use credit responsibly, use it for
Yes.
development.
Yes.
And pause and really calm yourself down before you go for credit. But
Yeah.
when you talk about developmental credit, it doesn't sound to me like it's short term. So it sounds long term.
Yeah.
Can someone come to you still for that, like school?
Yeah. No. So at the moment we don't have that facility available. I wish I could tell you the public where to go and get credit, but this is why we need to develop the framework and the options. But no, so they can't come to us for long-term loans. But I know that there are facilities out there where you can get a loan for school and home loans and so on. But again, I feel, especially coming from the past that we've come from, there is an aspect of a lot of these credit facilities still favoring, the privilege. I can possibly go into a bank, and because I have a credit profile, because I've got the job that I have, I'll probably better suited to get a home loan. But like we saw, over 50% of our respondents earn under 7,500 Rand. If you want to go into a bank and get a loan, is that feasible?
It's not as friendly.
It's not as friendly. And people already they already give up, they're like, no, I probably won't even qualify. So they go to other options. That's why we need better regulations and financial inclusions for South Africans.
As a lender,
Yeah.
would you lend me if I've been blacklisted? But let's say my income is fine. I had a situation 2 years ago.
Yes. Something happened in the
Something
past.
happened in
Yeah.
the past. Life happened.
Yeah.
But now I'm fine and my income shows, and maybe I'm paying back those guys nice and slowly.
Yeah.
Do you look at that, or if there's a blacklisting, you don't touch me?
We don't, unfortunately. We don't. I think our ethos is responsible lending. And if there's a point where you got blacklisted, there are a number of decisions that happened that made you incapable of paying out loans. And we want to honor that process so that you can get financially healthy, right? You actually asked earlier, the advice that would give our blog. We have a blog, and we've got a platform that we're building to enable people to actually make better financial decisions. So how do you save? How do you start a side hustle? How do you, better or find longevity with your finances when you know that this is how much I earn? Like, that's not going to change until, I get another job, or I get a raise, or I find a side hustle. What are the options that you can actually look at to enable you? And those options, there are many options that I think people are not looking at the moment. Lots.
Okay,
Lots.
that's cool. So all of this stuff will be in your blog. It is in your blog.
Yeah, so our blog is designed specifically to just financial education. I mean, if 6% of people don't know the difference between informal and formal lending, it's actually more. That's why we need a financial education platform that can help us all to just get better at finances.
We in your offices now.
Yes.
In
Yes.
the beautiful Cape.
Yes.
How do people access you? Is this Cape Town the only base that you guys are at?
So we're a purely online platform. People have to go to our website to go through the process of applying for a loan. So it's purely online across the country, you just need your cell phone or your laptop to access.
Yeah,
us.
I remember your advert was saying I'll get my approval in minutes.
Yes.
You will tell me very fast.
We'll tell you T's and C's apply. Don't forget
whether or not I qualify.
Yes. But yeah, we're pretty quick, and we like that value add for our customers. Yeah, so you can get an outcome in minutes, so you know where you stand and why.
So if I qualify, how long does it take for me to get the money?
You get your cash out in 15 minutes. Yeah, get your cash in 15 minutes.
I'll pretend I didn't hear. I don't need temptations in my life.
Quick access.
All right, but I think thank you for all the intel that you gave us, the insights that you gave us.
Yeah.
What's in your heart for the public? What would you like to drop and share?
I think, you know what, going back to the very first comments that you made, there's such a, if I can call it, trepidation around credit. People are insecure about it. You know, you don't share it as much. Even when you get a car, we all know that you got financing for the car, but you know, we're not going to say that. We're not going to talk about, hey, my Ford Ranger is through this, I'm paying this much. There's just a lot of anxiety and negativity around credit, but we see that a lot of people are taking credit. I think we need to demystify this anxiety that surrounds credit, but also see it as an opportunity for people to better their lives. So if people are taking out credit for housing, education, to better their small businesses, that's an opportunity for many South Africans to take out. But yeah, I think there's also a lot of positivity around credit. So a number of our respondents said they feel relief after taking out credit, because you know they were facing one thing or the other, where the emergency transport costs, food costs, lights, you know.
And I guess the people who would feel the relief are the ones that came to organizations like yourself.
Yes. Yeah.
Where the interest is a bit friendly.
Yeah. We didn't talk about it, but 23% of the people who borrowed from informal lenders actually said that it was their most expensive credit. Yeah. Payback. Well, the money that they pay back. So it's also pretty. It's touchy. Informal lending is pretty touchy. But yeah, over 60% said they felt relief. A lot of people said they choose their credit provider based on convenience, on their ability to get quick results.
And not interest. Yeah,
interest is interest across all businesses, but it's not 50 or 30%. Yeah.
What's the future for Wonga? What should we look out for?
So Wonga is still going to be, a short-term lender. We're here to help people own their possibilities. That is our value and what we bring to the South African market. But we're always, innovating. We're always advocating for financial inclusion. If there's one thing that I think I would like your customers to take out of this is, we're not just a lender. We really want all South Africans to be included in credit facilities and in the financial markets, so we can all prosper together. It's not fair that some are prospering and some are not. We need to find that balance and develop our economy, I guess.
Is there a dream to get into Africa, the rest of Africa?
Not
Putting
yet.
you on the spot, eh?
Not yet, but you know what? Hey, we'll see what the future holds. I think for now, we're comfortable in South Africa, and we want to see the South African business grow.
Okay. Thank you.
Thank you so much.
Thank you for hanging with us till this time. I think we'll see you in the next episode. Use credit responsibly, and I have introduced a new term for you: responsible credit.
Yes, responsible lending and responsible borrowing.
Responsible borrowing and developmental credit.
Yes.
That's where I was going.
Developmental credit.
But there's a word you said. I wanted to ask you, trepidation.
Words just come up sometimes. It's just like, what?
In my head and thought, who talks like this? Anyway, I'll Google it. See you in the next episode. Thank you.